Welcome to Money is Freedom, a podcast exploring how finance and freedom connect in our lives. Created from thoughtful research and narrated by NotebookLM AI, this series brings you clear, meaningful insights into finance and beyond. Welcome to episode 2 of our podcast, brought to you by 14K Feed Up and narrated by NotebookLM AI. Today, we'll explore Bitcoin's surge to $73,000, approaching its all-time high, despite market uncertainties like pending election results and upcoming labor data. We'll discuss how Bitcoin's current movement mirrors historical cyclic patterns since the last market bottom, and what this could mean for investors and the crypto market. Let's get started. Disclaimer: this podcast is for informational purposes only and does not constitute financial advice. Please consult a professional advisor before making any investment decisions.
Hey everyone, ready for another deep dive into the world of Bitcoin?
Always ready for that.
We're diving into some seriously cool stuff today. We've got this awesome report called Navigating Bitcoin to unpack.
Oh yeah, I saw that one.
Yeah, and of course we've got your super sharp notes too, right? Always got to have those.
Always.
Oh, and did you catch the breaking news? Bitcoin just hit $73,000.
Wow.
Crazy, right? Practically an all-time high.
It's definitely getting close.
I know. It makes you wonder what's really pushing these price swings, Especially all those short-term jumps and dips.
Yeah, it's definitely more complex than just, following the halving cycles these days.
Exactly. So that's our mission today. We're going to try to figure out what's really behind those movements so you guys listening can make some smarter decisions out there.
Absolutely. And knowing those cycles, they're historically linked to those halving events, right?
Oh, yeah. The halving, right? Where the reward for mining new Bitcoin gets cut in half every 4 years.
Exactly. Yeah. You usually see these 4 phases: accumulation, markup, then distribution, and then markdown.
Classic cycle. But like I was saying, it's not as straightforward as just riding that wave anymore. Both the report and my notes are pointing to that.
Yeah, there's definitely more at play these days. Like what the Fed's doing with its monetary policy, that's a big factor.
Right. You mean stuff like quantitative tightening? Or QT for those in the know.
Exactly. It's like, imagine the Fed hitting the brakes on the economy, right? They're pulling money out of circulation.
Making it harder to invest.
Yep, exactly. So during those QT periods, Bitcoin's probably going to have a tougher time, right?
Makes sense. Investors get a little spooked. They start running to those safe haven assets.
Right. But then you've got the opposite, quantitative easing. That's when things get interesting.
QE, like flooring the gas pedal.
Yes, exactly. Fed pumps money into the system. Everybody feels a little more adventurous, and they're more likely to take a chance on riskier assets, Bitcoin included.
Bitcoin loves a good QE party.
Yeah.
Okay, so we've got QT, kind of like a wave crashing down, QE pushing things up. But then our report throws us a bit of a curveball.
Oh, yeah?
It brings up this whole political angle, Trump trade versus Harris trade.
Oh, yeah.
Kind of caught me off guard, not going to lie.
And it's not about endorsing any political figure here.
Right.
It's about understanding the psychology of the market.
Right. How perceptions around specific policies or figures can influence how people invest.
Exactly, yeah.
All right, so pretend I'm totally new to this. What was the Trump trade, and how did it play into Bitcoin's story?
Okay, so after Trump's election back in 2016, the markets were expecting tax cuts for one, and overall this pro-business environment.
So everyone was feeling pretty optimistic.
Yep, feeling good. Fueled a surge in stocks, and Bitcoin kind of got swept up in that wave.
Like a rising tide lifts all boats, even the digital ones.
Exactly.
So indirectly, the Trump trade was a good time for Bitcoin, but then we shifted over to the Harris trade.
Right, that term kind of reflects what people expect from policies more associated with Vice President Harris.
Right.
Things like, social infrastructure and all that sustainability stuff.
Yeah, so how does that impact Bitcoin exactly?
Well, those policies, they have a bigger direct impact on things like long-term treasury bonds. But then there's a ripple effect, right? Changes to those interest rates and global liquidity that does affect Bitcoin.
Yeah.
It's all connected.
It's mind-boggling how everything is tied together.
It is. It really is.
Speaking of connections, I noticed something interesting while I was prepping for today, and it's something the Navigating Bitcoin report highlights too.
Okay, I'm curious.
It's Bitcoin's sensitivity to the U.S. unemployment rate.
You're onto something big there. That's a crucial pattern to understand.
I thought so. Why do you think that is? Why does rising unemployment make Bitcoin investors so nervous?
Well, it's a signal, isn't it? A signal that the economy might be heading for trouble. And when people get nervous about the economy, they tend to shy away from volatile assets. Bitcoin, unfortunately, falls into that category.
It's like Bitcoin has this like fear of pink slips. You know what I mean?
That's a great way to put it.
And it's not just a theory, right? Like back in March of this year, Bitcoin took a dip when the unemployment rate jumped up.
Right.
Even though the S&P 500 was doing just fine at the time.
Exactly. Shows you just how sensitive it can be.
But you know what's even crazier? In my notes, I noticed that a lot of Bitcoin's major price rejections happened right around the time those unemployment numbers get released.
It's almost like clockwork, isn't it?
It's spooky. And speaking of things that make you go, we can't ignore today's news, right? Bitcoin at $73,000.
I know, right?
Flirting with its all-time high, exciting stuff.
Yeah.
But there's also a ton of uncertainty hanging in the air. We still don't have the election results.
Right. Who knows what's going to happen there?
And then there's this week's labor market data coming out, not to mention a super strong U.S. dollar.
Yeah, it's a real tug of war out there. Is this like Bitcoin's moment? Or are the bears about to come out and play? To figure that out, let's look at another trend both you and the report picked up on, something called Bitcoin dominance. So Bitcoin dominance, it's basically how much of the whole crypto market Bitcoin controls.
Ah, okay, market share.
Yeah, think of it like, who's top dog on the crypto hill.
Right. So my research and this Navigating Bitcoin report both say Bitcoin's dominance is actually growing.
That's exactly what we're seeing.
Like people are getting kind of spooked by all those altcoins.
Yeah, and kind of retreating back to the safety of Bitcoin, good old reliable Bitcoin.
Bitcoin, the OG crypto.
Exactly. When the market gets a little shaky, Bitcoin starts to look pretty good.
A safe haven, but like within the crypto world.
Yeah, exactly. A safe haven inside the bigger storm.
Love that. Okay, so Navigating Bitcoin, it suggests this dominance could peak.
Yeah.
While Bitcoin is above, its 20-week SMA.
Ah, yes, that's right. The simple moving average.
SMA, right?
Yeah, sorry. It's just a technical indicator. Helps traders see what the market trends are.
Okay, so like a tool to help spot those patterns.
Exactly.
Got it. So according to the report, as long as Bitcoin stays above that line, its dominance is probably going to keep going up.
That's what it's looking like.
Interesting. Okay, so Bitcoin's looking pretty strong right now, potentially. But then we've got this whole other thing happening.
Yeah.
The Fed and that recent rate cut. Seeing some mixed reactions to that.
Oh, yeah, for sure.
Some say it's great news for Bitcoin. Others are a little more, hold on, let's see.
It's complicated, right? And that's why there's so much debate going on.
It's a head scratcher.
It is. Remember how we talked about QE?
Yeah.
Like flooding the market with money?
Yeah.
Well, rate cuts are kind of part of that same playbook. They inject some liquidity, get things moving, and investors start feeling a little more adventurous.
Feeling risky.
Right. More likely to jump into riskier assets. And that includes,
Bitcoin.
Yeah, Bitcoin.
So that little price jump Bitcoin got after the rate cut.
Yeah.
That was like a sugar rush.
It was like, woohoo, party time.
But there's always a but, isn't there?
Unfortunately, yeah, there's a pretty big but.
Lay it on me.
Rate cuts, they often come right before a recession.
Oh, no.
And historically, recessions have not been good times for Bitcoin.
So it's like a, yay, free money, and then, here comes the hangover.
Yeah, exactly. Short-term boost, but then the potential for a really bad downturn.
The double-edged sword of rate cuts.
It really is. And that brings us to this big question. Can this rally keep going, or are we headed for a correction?
Yeah, that's $1 million question, isn't it? Feels like we're on this, tipping point, just waiting to see which way things are going to go.
It does. It really does. But there's something else we can watch, something to maybe give us a clue.
Oh, I'm all ears.
It's something both you and Navigating Bitcoin have been talking about this week's unemployment data.
Right. That's a big one.
It is, yeah. Like this giant question mark hanging over everything.
Yeah. And it could really tip the scales for Bitcoin one way or the other, right? Like if the numbers come in lower than expected.
Lower unemployment?
Yeah, and maybe the Fed starts hinting that they might ease up on those rate cuts.
Ooh, that could be a big signal.
Right, like a green light for Bitcoin to take off.
Yeah, it could be a real bull run, for sure.
So basically, good news for the economy.
Yep.
Less panicky Fed, good times for Bitcoin.
Exactly. But, if those unemployment numbers start creeping up.
Oh, yeah, the other side of the coin.
And the Fed gets all jittery, that could mean things are going to get a little rough.
It's almost like strong economy equals happy Bitcoin.
Yeah.
Shaky economy. Bitcoin's got to watch out.
Right?
Oh.
Like a canary in the coal mine for the whole market almost.
Yeah, that's a great way to put it. It's really making me think, understanding all these bigger economic trends, that's key to investing in Bitcoin, right?
It absolutely is. It's not just about Bitcoin itself. It's about the whole picture. And remember, we've got Bitcoin flirting with all-time highs right now.
Yeah, crazy.
But there's still a lot of uncertainty floating around.
Oh, yeah, for sure.
Like those election results, that could throw a whole other wrench into the mix.
So much to watch, so much to think about. But okay, let's bring it back to the everyday investor, Someone like me trying to figure out this Bitcoin puzzle. What's the takeaway here?
I'd say cautious optimism. Bitcoin's proven to be incredibly resilient.
Yeah, it's a tough cookie.
It is. It really is. And there are definitely some reasons to be bullish, but you got to stay level-headed, right? Don't let the hype sweep you away.
Easy to get caught up in all the excitement.
Yeah, exactly.
Yeah.
Pay attention to those economic indicators, especially that unemployment data coming out this week. Stay informed. Be ready to adapt. Knowledge is power in this market, that's for sure.
Knowledge is power. Love that. Man, this has been an amazing deep dive.
It has, yeah.
I feel like I finally have a decent grasp on what's actually moving those Bitcoin prices, especially those short-term swings.
That's what we aim for.
Yeah. But the biggest takeaway for me, it's not just about Bitcoin. It's about understanding the whole picture, the entire economic and political landscape. That's what really drives things.
It's all connected, right? And that's what makes Bitcoin so interesting and so challenging. So keep on learning, keep those questions coming. And hey, we always love to hear what you guys are thinking. What are you noticing in the market? What's your take on all this?
Absolutely. Share your insights, keep the conversation going. And until next time, happy diving, everyone.